There we go. I wasn't getting the sound through my speakers. All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 25th, 2022. We'll start with the market health check. Oops. There we go. All right, starting with the 150-day look. Well, I guess I got to share the screen, don't I? Yeah. Let's try that again. All right, how we doing now? All righty. All right, so the 150-day look, we're holding that support level that we talked about yesterday, just above the 10-day high, and at this crucial support level that we've been identifying around 415-ish. And today we had a nice recovery off of that support, so half of the cup is formed. We need to see it get above 430 to be very interesting, but today was a positive day up. All other systems look good. On the zoom in on the 30-day look back, you can see we had another small range day, closing at 419 and a half. Back up inside the dragon. There's the dragon. So we've recovered. Just have to get through this resistance through the 5-day high at 425, and then we push north of the PSAR and the RL10, and then that's really about 432 is where we can really have some confidence that the up move is resumed. So this would, if that were to happen, if we were to get that kind of move, then this would be seen as a routine buy on dip opportunity. So that's what tomorrow is going to be, is to determine is this little move for real. So we actually have a 1-2, because again we've there's bar 1, here's bar 2, we got that higher low. So all we got to do is get an open somewhere in here and take out this high from today without making a new low, and then that's a 1-2-3 entry from right there. And that'll be very favorable. Then it has to get through that 10-day high, and then that'll be good. Zooming in on the 30-minute chart for today. Again, this is our 5-day look back to here. Here's the 10-day. These are all 30-minute bars. So we had just that little blip yesterday at the close. This was one good solid surge, held support and resumed. So it gives it almost a Kata 2 flavor, and looks very favorable, and closes up here at 419. So that's as positive as you could ask for on a Thursday. So now we'll see, can it get to 423 tomorrow, and then to above 428. That's the next support level. Here's the 5-day high and the 10-day high. So it's got its work cut out. Probably won't get all that on a Friday, but how this finishes up tomorrow will give us some insight about how to interpret this sell-off. Was this simply a buy on dip and a resumption, or are we going to get more of that? So The price to watch on the downside here will be this belly of support like at 414. If that fails, then that's presaging more downward pressure. So critical state, compound critical state tomorrow should be very interesting. A trader's day in bearish, quiet conditions. All right, let's take a look at sector performance today. All right, so today the S&P was up 1.4 with that nice run right in the last half an hour. Treasuries were off a little bit at 1.39, but held nice support. That was a nice rebound off of the support at 110 and gave a really nice performance today. We'll see that trade again. We were prepared for that one. The Dow was up 1%. That was the underperforming sector for the day. Then the Russell up 1.5%. The Qs up 1.77. Emerging markets were best at 2.13. So this was really all systems go to the upside. While we're here, let's just take a look at the outperformers. So the S&P here at 1.4. You had commercial real estate and wood at 1.5. Real estate, finance, global future of finance and tech at 1.7. From 1.45 to 1.7. Clean energy, 1.7. Staples and ARC Genomics at 2.4. ARC Innovation, the FANGs at 3%. Big move there in the FANGs. And marijuana with a second strong day up at 6.25. Individual targets. It was all the metals today. And we were so well prepared for that. There's your Alcoa at 4.5. U.S. Steel and Cliff at 6.3 and 7.4. Meanwhile, financial disruptors, Robinhood, PayPal, Squarespace, all looking good at 2.7, 3.2, 5.25 for Robinhood. Devon Energy strong at 1.75, and Apple, our other target, at 1.5. All of that defeating the S&P. So it looks to me like metals are still enraged, and I would say the energy sector looking pretty good too, with Devon and clean energy outperforming. To the downside, again for reference, here's the S&P at 1.4. You got staples and the other lumber at 1.13. Mexico and blockchain at 1%. Then the big cluster here of energy, blended, large cap crypto, oil exploration, uranium, Brazil, staples, Ethereum, lithium, Aussie dollar, and wheat and precious, all from 0.7 all the way down to 0.15. And then this is also the demarcation line between absolute winning and losing. You had biotech minus 0.3. VIX still showing the way to the upside with a low performance today for the portfolio insurance. Agriculture gave back 0.63, is still above 20. That's key. Bitcoin, blended commodities, and oil kind of giving back at between 1.5% and 2%. Tesla off 0.34. Today was the reverse was the split 3-1, off 0.3. So now we got to recalibrate our estimates. The range stat now is $15.50, so $1.50 is his R10. We have been used to trading that with a $5 intraday, but so now it should be about $1.50 should be your R10 in Tesla. Okay, Coinbase was off a fraction. Rivian only 1%. Microsoft 1.11. So Apple is winning in the battle against Microsoft, but they're both doing fairly well. So it looks to me like energy and metals tomorrow, and to a lesser extent S&P Tech. Go to the reports. All right. We'll start with the sniper trade of the day. So today was U.S. Steel. I mean, just right by the numbers. U.S. Steel with about a 25 cent R10. The R10 on that is about 14 cents, but I rounded up to a quarter just to keep it clean. Here was the close yesterday. Here was the gap up. It rolled up and rolled back, and that establishes the OR3 right here. The second bar opened, and it takes out the OR3, so I buy it with a standard risk box. It gave a little bit of gain, but then rolled back, so I scratch. It did not fail further. The MACD reverses up. So when it crosses the dragon, I just re-enter, hold my nose and buy it, standard risk, orderly exit, does not fail further, PSAR flip, I buy it with a standard risk box, orderly move. There was a emerging dragon potential for an entry there, really a better one here. But this is 1 unit of risk, 1, 2, so that's plus 2. This one was plus 1. So now we're at about plus 3 net for the day on that. And then one final one. There was just no sign of this thing wanting to fail. This was just steady and continuous buying. It gives another plus 1. So for plus 4. So I keep one of those as a swing trade, using 24.5 as my entry, with a dollar risk, and that, so I'm using market's money from all of these moves to fund the risk capital for the overnight position. So that's the sniper trade of the day. Felt pretty good in U.S. Steel. We'll run to dashboard number 1. Still bearish quiet. A nice little recovery today on the 2-day. The 10-day got a little bit better. The intermediate terms are looking fine. We still have a micro advantage to the long side on for risk on in the risk Z. It's not overheated by any means. The 10-day min pains, including Alcoa, ExxonMobil, and Chevron in the energies. Coca-Cola among the staples, Caterpillar in the industrials. Disney, Home Depot, and Tesla still showing some max pain conditions, along with Walmart and 3M. Dow Tactical, I'm noticing still a ton of auto framers to choose from. Lots of 551Ws. A handful of dojis, 1 5DD in Procter & Gamble, which is at 3.4 to 1. So that's an interesting value play there. Intel gave us the move today. I was so busy with the metals that I missed it after yesterday's shenanigans. I was not a big fan of Intel. Let me go check and see what I missed. Probably going to be in despair. Yeah, pretty much. Let me go to the 3-minute. Yeah, Christ, cripes. Yeah, that was the move I missed this morning. God darn it! You can be prepared and just not alert. I was so busy with the metals that I missed this move right from the get-go. And in Intel, the That's the size of the standard risk box, is about 10 cents. So that should have been an entry here, and make that play for about 3R, and then a re-entry here. So it looks to me like Intel's is in play. This had a nice move and a strong finish, so I will be ready for that tomorrow at above 34.90. Intel is in play. So you can plan all day long, but if you're not there to execute, then, note to self, set the alert. The good news on Intel is that there's a lot of underperformance that it has to equate. So it's still a deep value play in here. I like that. So try to do better tomorrow. I forgive myself. Not happy about it, but the ETFs, a ton of auto framers, lots of 551Ws. That's a sign of a healing, healthy market. Just a few dojis. It was mostly directional today. The only breakouts, materials, that's partly where that's energy. That's part of where the strength in Devon is coming from. And then metals and mining, and this is where some of that strength in steel is coming from. You can play SLX for steel. Like if you don't want to try to differentiate between Alcoa, Cliff, Nucor, U.S. Steel, you can play SLX. It's not liquid enough for intraday trading in my view, but for swing trading, it's one way to kind of play that whole sector that is a little more narrowly focused than XME. Now XME is certainly playable, and it was up 2.5% today, so that's not bad. But SLX is another legitimate choice for swing trading. Lots of auto framers today, not a surprise because we've pulled back from the 10-day high, and it was a relatively small range day. Still some good names here, Walmart and Home Depot. Disney, I think, is coming up on people's radar. Cisco and IBM in Techland. And there's your DIA and the Russell, Treasuries, the S&P. When all of those are inside this, better than 2-to-1 on the squeeze, you have a real market condition that is supporting a potential range expansion tomorrow. So I'm really expecting some kind of tactical move tomorrow, a nice one-day pop. The daily squeezes, now these are the ones that had exceptionally tight range compression today. Walmart, Procter, Home Depot, Chevron in the energy space, McDonald's, oil exploration. That's pretty good stuff. Microsoft still pretty well squeezed, as is Brazil. So that's looking pretty good. The market is broadly compressed. To the sniper set, still got 4 Godzillas at work inside the S&P. They're all in quiet mode, ready to enrage. I'd be looking at Verizon. None in the tactical symbol set. Everything has bounced off that 30-day low pretty well. Lots of symbols firing, though, on the S&P, and these are all popcorns because the volatility is so compressed. WM, Occidental Petroleum, still enjoying the extra attention from Buffett. There's probably some more room left in that. The fence sitters are all still pretty quiet as well. Home Depot may be poised for a move. There's a nice one-day compression that may be able to take advantage of. In the most quiets, they're all tightly compressed on 5-day and 1-day. The most volatiles, there's a couple in there, DLTR and MDT, had expansion days today. HBI was close. Bristol Myers Squibb had a nice move today too. DG getting ready to stretch his legs, as does ADNT. SK, really tightly compressed 5-day, but a large 1-day range expansion. So that's you might look for second day momentum on that one. There's all of the auto framers for our tactical symbol set. This is still, I'm still sorting this by the daily percent change, because my contention is that the ones that had the biggest moves to the upside are ready for either a second day follow through or a rollover and collapse. So out of the extreme movers at either end of the stack are going to be the ones where I expect larger reaction moves tomorrow, whether that is a continuation or a reversal. It's, my experience has been, it's from the extreme conditions that you get the biggest next day follow throughs. It's almost always the case that the S&P is going to be stuck right in the middle in terms of the move, and that the further away you get from the baseline, the more likely there's extra emotion involved in here, and there's either going to be more of the same or a rejection. And today's losers are tomorrow's winners. That's why I like to pay attention to those extremes. From extreme conditions come extreme results. These are your the tactical symbol set. The sniper stats. Marijuana is still most interesting. Now here's why that's really interesting. On the 150-day look back, it's at 0.2, meaning that if you go back 150 days and you find the highest high and the lowest low, marijuana has sold off and only recovered to the 0.2 level. If that's 1.0 and this is 0, it has only recovered that little bit. So there's still a lot more room for it to recover. But the 30-day look back and the 10-day look back are both very strong near the top. So it's pushing the top, and there's momentum beginning to emerge. And today was a big momentum day up. So marijuana has got to be on your list for that reason, MSOS. Treasuries, interestingly, also had a relatively large day compared to all of the other quietudes on the one day. Treasuries was the first big rebound day, and because it was a big up day bouncing off of swing support near the 10-day low, keep your eye on Treasuries for a nice another one-day pop. That makes a great swing trade, by the way. The multi-time frame NDX, lots of strength today, and you can see that the 10-day leaders and the 30-day leaders continue to be strong. Devon Energy and Chevron really rocking it. McDonald's is pretty good. Apple, pretty good. Energy, metals and mining, oil exploration, all of those rocked it today. Look how strong the industrials were. That's where that Caterpillar strength is coming from. That's kind of a stealth move right now. I'm liking that. Yeah, you can see on the regression line and the curve, the parabolic, that started to reverse. That gives us the 1, 2, potentially 3 in the resumption. We like that. All right, let's go to the sniper trading for today. Yeah, I think I already showed you U.S. Steel. That was worth about 4R. Here's Cliff, a steel company that also started off pretty well. So here's your gap. Here's the OR3. Here's where that reversed to the upside, so you buy it. Standard risk box. Looking for this and wanting to get your risk out of this as soon as you can. How soon can I lock in from my entry? How soon can I lock in the science project for no lose plus dinner for 2? And we will be happy to take if that's 1 unit of risk. 1, 2. So that's plus 2. I'm noticing this coming down, and I would love to see this hold support right here at the bottom of the RL10. And then I would like to see it recover and take out my little declining PSAR. That would be the symbol that, or the sign that this would go to the upside. And then notice that that would give us kind of a standard risk box, the same size as this one. So the trade geometry on this is boring and repetitive, which is what we like. And look how nice that little that retracement is. It conveniently comes all the way down. So now all I have to do is I'm still going to keep the same execution level. It's a violation of this RL10 that tells me the downside move is there. Only now I only have to risk that much of the standard risk box. I'm going to use this one for position sizing and for 1R, but I'm really only risking 0.5. Check or hold. So there's your 1 unit of risk. 1, 2. This was 1, 2, so now we're at plus 2. And plus 2, so we're at plus 4. This one didn't even fail. PSAR reverse. So again, now I can just, I'm really only going to risk that much. There's my standard risk box. Should have exited. Got lucky. At this point, you know, if you're plus 4 and that sector was really good and U.S. Steel was already enraging, if you decide to just go ahead and risk 1, why not? There was that one almost doesn't matter, but it was the metals were doing so well. I just thought, well, what the heck? Sloppy. Here I'm trying to justify that. I should have exited. So that's a B trade. All right, this is Alcoa, also the metals. Here's the gap up, and up it goes. There's the entry. There's the standard risk. Quick exit. And then I just absolutely missed the re-entry. You know, to be fair, I was in Cliff and U.S. Steel at the time. But, boy, I just missed this one badly. Part of it was I was a little off my game because this thing ran all the way up. Look how bad this was. Good Lord. There's my risk. This thing was 2R in hand. A simple trailing stop should have exited me here. I was doing it manually and span of control, and I let 2R slip away and felt really stupid. I didn't even get no lose plus dinner for 2. And then this thing reversed immediately, took out where I should have gotten out, took out the high of the day. There's the RL10 wiggle. So, man, there's errors enough for this thing to keep you busy for a week. So let's just count these errors. Number 1, failure to use a trailing stop. Should have been out here instead of here. And then when this reversed, probably re-entry right there so that I don't have regrets. But if I don't enter there, then I got to re-enter here. And if I don't re-enter there, I got to re-enter up around in here. So just count them. Count the mistakes. Now, the exit, so if I do get this entry, and I'm going to say if I do get this entry, then that's a legit scratch. Or if you decide to wait for this and take about a 1R loss, that's fine. But then no matter what, you got to re-enter here because you now have a COT of 2. And then that's a standard risk. Better scratch. PSAR flip, COT of 2. And actually, that's not a COT of 2 because the previous RL10 bottom was here. And this is a lower low, so that is an SSC because we could say that's almost a 2R retracement. So this is an SSC, standard risk box. You're justified in taking that as your exit, as your execution stop. Scratch, re-entry, scratch. It's like, okay, I get it. It's not working today. Should have, the other metals are working better. You don't know that. They all look the same leaving the station. Another SSC. Oh, okay, that's right. One, two, three, four. It had a lot of catching up to do. So the net of all this stuff and all those errors, so that's a scratch, a scratch, a scratch, a scratch, and plus 4. So it gets to the same level as the other metals did. It just took a slightly different path. I like the fact that there was some initial buying and then no real collapse and then a very strong finish. So I think Alcoa is definitely in play tomorrow. The bears could not crush it today. That's how I'm going to interpret that. All right, Devon Energy, that's been a really good energy trader for us lately. So I'm excited about this one. This one should be awesome. Some wild and woolly volatility right from the get-go. So you get the RL10 wiggle and continues up. So standard entry at the high of the day, standard risk. This thing runs up 1, 2, and then starts to roll over. So this time I'm smart enough to cash plus 2. So it did better. Alcoa was horrible. This one was better. Missed the short completely. This is one of the consequences of having a directional bias in your trading plan, is that you just have to learn how to say, well, I'm playing the upside, and even though that would be my standard entry with the standard risk, and then that would be 2R, you got to learn to let that go and just notice things and simply describe what's happening. It's not like there's any shortage of opportunities. So just play the patterns you want. Learn to let the other ones go. Somebody else has got to eat. So I'm noticing the RL10 finding support right where it found support right after it did this. But I also noticed how volatile. So this could be Mr. Toad's wild ride. Just got to know that. Be much more inclined to cash them when you get them. PSAR flip. Entry, standard risk. I like that it has consolidated here and did not fail further and then came up and took out the PSAR. So we'll put the PSAR flip on it and the standard risk box. And still volatile as can be. So that's about a 0.5. I'm cautious on this one, even a little more concerned, because the peak of the RL10 is down, and energy's had such a good run, especially Devon. Maybe this is it. Maybe this is the upper limit. Don't know. Still kind of interested in that upside. So COTA 2. Because you have this and this and this PSAR flip, standard entry, risk box here. I will execute off of this one, but now it rolled over in time to hit the PSAR, so I can get out of that one at about a minus 0.4. So now I feel we got a lid on it, a lower lid, and another lower lid. This is all feeling down. Missed the short completely. Good Lord, Kenneth. Lower highs, failed to execute. That's a standard entry. Comes all the way back down exactly where you would expect. Missed 2R on that one. SSC. So I'm interested on this thing on the long side. So I'll just stay with the trading plan. Here's support. Here's support. There's the standard risk box. If this had any kind of performance during the day, I would ordinarily be interested with a second position right around here. But this failure of follow through, plus you will recall that XLE and USO were both near the bottom of the stack, so this feels only like Devon Energy trying to work. So it doesn't have the benefit of the sector or the commodity pushing it up. So with strong resistance here and here, I'm happy just to get this one to no lose plus dinner for two right about now, or maybe even here, and just be done with it, because this ain't going anywhere. And it takes sort of the exit where, the weakness where you would expect, and rolls over. So I'll cash the 1R, happy. It finds support. I would think at 2:30 there's still some time left, and we got a caught at 2, but this has been so weak. Surely there's nothing left, and there's all this resistance. There's just not that much left. So I notice it and make a command decision not to take it. And it closes well. So missed an R there. That's not a risk I'm happy to take. I was much more content to be in those three metals. When we go back and look at the, this is at the same time that Alcoa is doing that into the close. And Cliff is running up strong into the close. And U.S. Steel is closing strong. So I'd rather be in those than trying to make something work that just wasn't working. So I noticed it, but I was content with the exposure on the other ones. So here is, okay, that was, I guess that was Devon. Where's that? Here we go. So this is Treasuries. Now, on the swing trade, where Treasuries have been was up around 120 and had come down to about 110 yesterday, and kind of small, was starting to find support here. So today looked like one of those opportunities to just say, look, let's set this up, and if we get any kind of recovery higher than that, we'd be willing to go long. And if it fails below there through that crucial, that might be a sign of a big loss coming. So on a swing trade, that little sell off to a known resistance level and a round number in the Treasuries sets us up in the zero state, and we have no directional bias. And what we got today was yesterday's close, and then a breakout above, and then a standard risk box. Nothing COTA 2 resumption, standard risk, now starting to work and fail for a fraction. And COTA 2, a little bit more strength. Now Treasuries are starting to go to the whip hand. They're starting to put some coal in the engine. And this is leaving behind that crucial support level around 110. This is somewhere around 110 down here. That's leaving the station and making that move. That's what a turnaround on a swing trade looks like. Nice. That's about 2R. COTA 2. Nice. And closed pretty well. So this is this was a significant turnaround here in Treasuries. This is the buyers coming in and hitting it and being willing to hold it overnight. And that 110 is probably down like this is about 110 down here. This is 111, and that was the first move up in Treasuries after about a 4 to 5 day sell-off. So that's what the beginning of a swing trade looks like. So if you can find them at a critical state on swing trades, and now you see that you're prepared for the reversals and you start seeing that buying pressure, you're going with the tide. That's a reversal of the tide, especially on something that is so large as U.S. long-term notes. Just strategy there. Okay. To the traders. Here's Tim with the crude. 3 minute. Sees the range compression right at the PSAR or the VWAP. Gets the nice PSAR flip. Crushes it. Takes the short could have been here when it crossed the VWAP and rolled over and fell down. He waited for it to break below the collapsing dragon. This is one where I want to see you get the 1, 2, 3 exit, like right here at the edge of the dragon. I would rather see that. He tries the rollover and short, quick scratch, or quick loss, quick scratch, and gets paid a little bit more. This is one right in here where when this leaves the drag, you see how the dragon rolls over? When this leaves the dragon, you can hit that here, or at the PSAR flip, or here at the collapsing dragon. But there's ways to get in, especially after that long downward move. But still, positive expectancy, we will get paid. This is the E-minis on the 3 minute. He sees the lower highs. Another PSAR flip to the downside. Now this is a much better exit. After that, opens, sells off, comes back up, continues to go up, taking it right there. That's perfect. Now your entry here on the reversal could be here instead of here, but I don't mind you waiting for it to get above this peak and above the VWAP. That's fine. This is nice work. I think you should be here on a 1, 2, 3 exit is here when it leaves the dragon, as opposed to down here, because that'll give you that extra little bit of performance, which is about half an hour. And then this is your short signal all day. Ooh. That's the price of not chasing. Permission to chase. But 2.2. We'll take that. That was healthy. Here's Tesla on the split day. Devon Energy, the short and then recovery, and then that's your PSAR flip. Oh. Here's the collapsing dragon in Tesla for a quick 2R hit. There's another one available here, but he was out of the market, so that's +2. 5-minute Aussie starts trading here, sees the high, a low, a higher low. So that's like a 1, 2, 3. When 3 is lower than 1, then 2, a breaking of the support at 2 is the short. That is perfect collapsing dragon. Perfect. 1, 2, 3 exit would be here. Perfect. Stop and reverse. Now, this failed right where it failed, so we cannot give back that much. What could we do? Well, we could see this open. It closed here, ran up and started to run down. You could take it when it goes below the previous bar's close. You could take it here at the peak of the RL10. You could take it at the edge of the dragon where it leaves the dragon. Any one of those, 1, 2, 3, 4, is psychologically better than that, because we captured this and we gave back 80% of the gains, where all it did was move right to exactly where we would expect. And then that hurt your feelings, so we weren't trading. But there's your Kata 2. And then that thing runs up almost to the same level. Some good lessons to learn. Console yourself with 2R, and sharpen your knives and be ready for tomorrow. All right, really good work today, fellas. And we'll get this published and posted and into the record books. Okay, Cal asked me, can I go over the math on the overnight swing trade with markets money? Sure. Here is the essential idea. You have a pretty tight risk control intraday with equities, because you have a continuous signal. Let me erase all this stuff. All right. So if you want to hold a swing trade, so let's say like on Treasuries. Treasuries was it was down. If we look over the last 3 or 4 days, Treasuries has been down. It was holding support around 110. So we set up a little frame on that thing and said, hey, if it holds support north of 110 and we get some upward moves, yeah, we might get the intraday move to the upside, but that might also be part of a swing trade reversal. So there might be multiple days up, and maybe I want to take markets money from what I earned intraday and hold a piece in case there's a favorable gap. So in this case, the willingness to hold it overnight is geared towards the fact that I have a reason to hold it overnight. Now, in a bear market, there's never a reason to do that. But this is Treasuries, and that's often an alternative position to equities. So when equities are in a bear and then have had a nice little bear quiet bounce and are vulnerable, going into Friday, maybe equities are down, which means that extra money that is coming out of equity profits might be looking for a safe haven in Treasuries. Treasuries are interesting because they have sold off, and today was a nice one-day bounce. So if tomorrow is weak and money is coming out of there, it wouldn't surprise me to see that come into Treasuries. So I'm actually prepared to hold Treasuries overnight because there is a swing trade logic to having that. As long as we are in a bear market, there's no overnight advantage in equities because tomorrow on average is down, and that usually means that the gap is not going to be favorable. The only time in equities I'm willing to hold those overnight is if I'm in any bull, whether that's volatile, normal, or quiet, or in sideways quiet. Right? So those are the 4 market conditions where with equities I'm willing to hold them overnight on a routine swing trade. But treasuries are often uncorrelated or inversely correlated to equities. So when equities are down here in bearish quiet, there's no advantage to hold equities, but there can be if treasuries are in a swing move that promises some possible upside moves. So I've just made the argument why holding treasuries overnight, there's a reason to do that. So clear on that first? Check or hold? Yeah, okay. So now, just to keep it simple, what I'm going to do is if I've got an intraday trade here, where I made some money, and now it's coming into like maybe the last 30 minutes of the day before the close, and I've made some markets money. Now, like on treasuries, I think the position size was based on 25 cents. So I'm going to have some number of shares based on that as 1R. Now, I don't know what the size of the gap could be. So what I do is I'll go consult the daily report and find out what the gap stat is, because that's going to be a measure of average overnight gap plus one standard deviation. So if it gaps that much against me, I'm not allowed to be surprised. So I can set that equal to 1R, and I can say, let's just pretend for the sake of argument it was $1. So intraday I can manage 25 cents, and I'm willing to take that as a 1R loss. So the overnight risk that I want to manage against is $1. So that means that my overnight position can only be 1/4 of the size because of the difference in the 1R. So if I'm carrying 100% of a position, in treasuries going up, and I'm saying, you know what, I could just exit this and cash the money from the day trade and just wait for the market to close, go overnight, and then open up and then just continue to trade it and not take any of that overnight risk. But I've made the argument already why I might be interested, because there could be a favorable gap, especially because treasuries trade all night on the futures market. So there may be guys buying the treasuries hard all night, and then there's a big gap up in the morning to account for the overnight move, and I'll miss that unless I'm trading the futures all night. So I don't want to trade the futures all night. I want to go play some soccer. So in order to be exposed to the potential upside of a gap, I'm willing to hold as I'm coming into the close in TLT in that last 30 minutes, right? I make a decision here and said, look, maybe I'm carrying 1,000 shares. Okay? The number of shares is 1,000. So if I want to carry that overnight at the same level of risk, I can only carry over 250 shares, because I can only be 1/4 the size of that. And so the positive money that I made intraday from treasuries is how I'm thinking. I'm banking the profit I made on 750 shares, and then using the money that's open from the 250 shares to say that's market's money, and I'm going to fund the overnight risk with money that I made intraday. Now you can do that with the gap stat, or just in general, I would say 20% or 10% is the size of the day trade position that you want to carry overnight without losing your mind, especially in a bear market. Bull market, it's a little bit different. Maybe it's a third, or you can do a little more math. But to me, you want to sell 4/5 or sell 90% of the day trade position. And the reason for that is probably more psychological than anything. That if I made money on treasuries and then the next day there was a big favorable gap, but I would pretend that I should have known that. And then maybe the next time I have psychological pressure to just let the whole position ride, and I don't want to do that because I'm letting my emotional charge carry. So I just say, look, I'll keep 10 to 20% of the position overnight as a general rule of thumb, as modified by the gap stat, so that psychologically, if it goes up, I can say I get to be right, but at a much reduced risk that I'm not putting the portfolio at risk. And that way I can feed my chimpanzee. I have to have a reason to support it, to do it. It's still a measured risk. And I'm going to treat that as a separate trade from the trade that I had intraday. Now, if I do that and it gaps up in my favor and then starts selling off, as long as I can exit higher than where I exited intraday, like if it gaps up to here and starts failing, I can get out of that and still make the extra little bank and say, oh, well, I was clever. But if that thing keeps going, then I can take the rest of the day trade position and then put that right back in and then re-enter the day trade, and we would call that a turbo. And we would call the overnight position the core. And that is what we would call core and turbo trading, where you use the swing trade analysis to decide when it's in your favor to hold the swing trade, and then manage or normalize the risk intraday versus the overnight as a function of the gap stat, or the difference in volatility intraday versus the overnight risk. That way, you're normalizing your risk across two different strategies for trading. Just as a general rule of thumb, 10 to 20% of the day trade position could be kept without blowing yourself up. But as always, your mileage may vary. Do your due diligence. Does that make sense to you? Oh, I would say my overnight stop would just be whatever the original stop was on the day trade. I'm going to use, let's take a look at the Aussie dollar for a minute. So, like if this was the position, and then this thing was really closing well, and my entry might have been from here or from here. Let's say it was this one. And this would be my stop intraday, and this thing was closing well. So if I offload 80% of the position and still keep the original stop, there's a logic to that stop. Like this is where that trade should fail, but it didn't. So that's still going to be a significant price level. And with that extra wider stop, I probably have enough room. The other thing you can do is just go right to the daily chart or the hourly chart and take a look at where the rising PSAR is. Because the PSAR on the 1 hour chart is going to be where logically is a reasonable stop. So whether that's the 1 hour or the daily. So wherever the stop makes sense on the higher time frame, then that's what I use. Make sense? Let me see on Treasuries if I can call that up. Yeah, so here's the Treasuries trade. Hope I'm still recording this. That'd be nice. Yes. So we could reasonably say, I'm trying to remember, I think the last entry in Treasuries was here. It may have been here. But let's say that if we got in here and we got out here and then we re-entered here, the stop for that one is right around, let's call it 112 and a quarter. And then maybe in the last half hour, we decided to get out here or here, but we wanted to keep a piece of that trade. We could look at this and say, look, tomorrow if it gets out at, 112.60, like tomorrow, if it gaps up here and then starts selling off, I'd want to get out of that before it comes back into this region. So you can take a look at where the opening is, and then put your R10 risk box on it, and just say, look, if it moves an R10 against me, I'm going to get out, and I'm just going to capture the move, essentially from here to there. But your overnight risk would probably be here or here. So let's remember that 112.40 or 112.60. Now if I go up to, let's go up, say, to the 30-minute chart. You could also just simply decide, you know what, my entry was somewhere in here, and I'm willing to hold 112. So here's your dollar risk. Hey, I've decided to risk $1, and if my standard risk per trade is $400, and I'm dividing it by $1, then the number of shares that I could have on the swing is 400 for a 1R risk. Check or hold. Intraday, if my stop is 25 cents and I'm risking $400 per trade, I could have as many as 1,600 shares because I'm managing against a 25-cent 1R loss. Guess what that is? That's 3/4. So I have to sell 1,200 shares and keep 1/4 of it, just because that's the difference between the levels of risk. I'm still normal. I'm risking $400, but position size is being driven by the size of the manageable 1R risk. So that's what it looks like on a 30-minute chart. What does it look like if I wanted to use a 2-hour chart? If I use a 2-hour chart, then my price, my stop is also probably the edge of the dragon, also 112. That's $1. 112 feels like your stop. Like, you don't want to suddenly risk, but if you decided, no, I want to risk $2, like I could tolerate a move to 111, then you're risking $2. And now your $400 risk per trade means your position size is 200 shares. So you got to go from 1,600 shares, you got to sell 1,400, and then that leaves you the 200. At some point, why monkey around with that? Well, one of the reasons is, hey, look at this. This is a strong support level, and the last time it was down here, look at the size of that gap. That's why you might want to hold that thing overnight. I don't know. But you want either a $1 or a $2 risk on the Treasuries for that reason. If I go now out to the daily chart, see, this thing is still a hawk. This thing is still a pig. But what makes it interesting is the fact that 110, like I said earlier, 110 was that support level. That's the collapsing dragon. So you could reasonably say, give me my entry was somewhere around 112, and I'm just going to risk $2. And my upside target is this, 119. So there's plus 7, and I'm risking 2. That's 3.5 to 1. You could justify a $2 risk and just say, look, I'm going to put $400 into it, $2 risk. That's 200 shares. And I'm going to let it go. Now, the problem is there's no pattern there. Like, you would have to see, in our standard patterns on a daily, this is a 1, 2, 3. So you have to see a price above 113 to justify an entry. But this is where it closed. So I look at this and say, I'm going to get in if it goes above 113 anyway. Why do I want to hold overnight risk for 200 shares anyway? I'll just wait for tomorrow, and wherever it opens, I'll put a 25-cent risk box. Here's where it's going to open tomorrow. I'll put a 25-cent risk box. And then if it moves 25 cents in my favor, I'll buy it with 1,600 shares and be a serious person. Or if it starts failing, would you be surprised tomorrow if this thing started failing here and came all the way back down to 111? You shouldn't be, because this is still bearish on a daily. This was a one-day bounce off a support level. But look how chaotic that can be. Do you really want to hold that overnight? Maybe you do. Why do you want to hold that overnight so bad? But under certain circumstances, when you decide that you want to convert an intraday trade to an overnight trade, take a look at where your entry level is, what the stop would be indicated on the time frame you want to manage it on, figure out what that risk is, divide that into your dollars at risk per trade, decide what your position size is, and then sell off all of the day position except for that little piece, and then hold your nose and carry that overnight as the risk. Then take all the money that you made from the intraday trade, put it in a lockbox, and then decide, look, if that thing goes above 113 tomorrow, that's the money I'm going to roll right back into it and continue the trade. All I did there was protect myself against the overnight risk. That's one way to do it. Check or hold. Okay. So that's that. We'll go ahead and shut that one down now.